a deceleration in the rate of growth from some of the public companies in terms of how aggressively they were spending on green capex. And we still continue to see some challenges as it relates to the current investment climate and the uncertainty. So it certainly makes sense that overall investment, and in addition, green capex will be a bit more at risk here in the near term. And so what we've tried to look at is, where do we see areas of resiliency? What will rise up above the uncertainty? Because either, number one, it is going to be essential and needed. Number two, it's actually price competitive and not necessarily requiring government support. Or it is supported by those who are willing to pay green premiums, of which we highlight big tech's willingness to take an all of the above energy approach.
And I thought we were going to dedicate the whole conversation to EVs and solars and other renewables, but you mentioned defense, and I'm like, how does this fit into green capex and the theme of ESG? We're in a different world.
We're definitely in a different world, and we've been actually shifting from a sustainable investing perspective over multiple years in terms of a broadening of the acceptable investable universe from sustainable funds. And that doesn't mean everyone. There are still going to be a lot of different sustainable strategies, in the same way that there are a lot of different more traditional strategies of growth and value and GARP, et cetera. But we think that there's really an opportunity to be more broadly shifting to broaden that investable universe. That doesn't mean necessarily everyone will be investing in defense. But if we think about the definition of sustainability, there is, I think, more debates that we're having over what that incorporates and the need for insurance to ensure sustainable companies, sustainable governments, sustainable individuals. We don't necessarily think, though, that defense is part of what we call green capex. Green capex we would define as what's needed for lower carbon footprints, plus broader infrastructure and for clean water as well. And there, what we think is going to rise to the level of priorities are those investments that are required to keep the lights on, to keep the power on, to keep the water running, and to keep the water clean. And in an environment today of rising power demand growth, combined with aging infrastructure, combined with adaptation challenges of having to deal with lower winter low temperatures, higher summer high temperatures, higher overall temperatures, too much water when we don't need it, and too little water when we do need it. That's becoming more expensive to invest towards reliability, but we think it's going to be a priority among governments and among companies.
All right, so Brian, the whole defense and deterrence theme aside, right, you're saying that green capex is continuing, although it is slowing, notwithstanding, let's say, trends in the U.S., right? And the money is going into, keeping things going, allowing us to do what we do, companies to do what they do in the face of climate change, aging infrastructure, which tends not to be as efficient, and probably more importantly, let's talk about this, the fact that chances are prices are going higher. Inflation is going to be rising with all these tariffs that we've been talking about for weeks now, and energy consumption is a big chunk of that.
Yes, and so there's 2 points I would make. The first is, in an inflationary environment, one of the other areas that we think is going to be elevated or prioritized are efficiency solutions and technologies and innovation that can lower consumption intensity without changing quality of life. That could be efficiency in energy consumption, resource consumption, land consumption. And also, we see a bit of a shift towards, particularly from sustainable investors, looking more closely at the need for automation. And that's not only as an efficiency solution, but also with aging populations that we see increasingly widespread in G7 countries. So that would be the first point. The second point, as it relates to some of the inflationary pressures, is what is the overall impact in terms of power demand and broader cash flow? We still see relatively strong power demand growth in areas like the U.S., Europe, and I think it will go beyond that, and catalyzed not only by data centers, which is partly AI, partly non-AI, but also by broader industrialization that may happen. Could there be an impact from inflationary pressures and lower economic growth? Yes, there could be. Typically, it's been a bit less elastic.